Yeah, then we have it.
So, good morning, good afternoon, good evening. This is Andrew Turner, founder and host of the G&T Sessions podcast. And today we've gone back onto Zoom just to scare the living daylights out of everybody. And we've got a wonderful guest, Mr. Ben Murray. Hello, Ben. How are you?
I'm great, Andrew. Great to be here.
Yeah, and this episode, I've actually been particularly looking forward to it because as we were just chatting before we came on the episode, was in the kind of the software world, and if you combine the software world with the kind of finance world, then I've been very keen to get Ben on the show because I think some of the work that you're working on, Ben, is, and I know you'll explain it in a second, is actually incredibly valuable and important and foundational, I think. For a lot of people that I have come across and I've worked with over the last number of decades, who obviously need a good, what I would call a good partner or a good person to look over those kind of those numbers and those financial dimensions of the business, because whatever sex and sizzle that they build in the dev or the tech side, engineering side, there's nothing like rubber hits the road when you get into the finance area. And I know you're going to explain a bit about that when we go into that. So, I mean, for people that don't know Mr. Ben Murray, could you just give us a quick intro and help the audience understand what gets you up in the morning and what's going on in Mr. Ben's world?
Yeah, a lot going on, but yeah, great to be here. And just a little bit about myself. I'm a CFO by trade, came up through the ranks of finance and accounting in the airline industry first. And then got into software, and then kind of back and forth, and then firmly into software in the early 2000s, and then of course, transitioned to SaaS, came up through the ranks of FP&A, and then was a CFO at founder and private equity backed businesses, and started a blog on SaaS metrics around 2016, just sharing everything that I can, my templates, everything that I'm learning in SaaS metrics and finance, and I've grown that up to about 47,000 subscribers, and now offer fractional CFO services, teach courses in SaaS metrics and finance, have my own podcast, news site. So really today, live and breathe SaaS. And so that's what gets me up in the morning.
You're making being a CFO sexy again, you see, aren't you? That's what it is.
Yeah.
You're a bit like Justin Timberlake. You're bringing sexy back to CFO.
That's right. Trying as much as I can to make the CFO function sexy.
Well, no. I mean, I'll be honest with you, because I think the thing is that, like technology and CFOs, they kind of they do live in that kind of, there's usually a close relationship between them, isn't there? Because you're looking at the investment piece of it. It's, I suppose if you're in a business, an actual, not a software SaaS business, not a startup, or a scale up, but actually the actual enterprise that maybe is buying the software, then actually that whole business case around, where do you place your money? What's the business case? What's the payback? What's the ROI? What's the CROI? All those kind of famous little metrics that we know about. They're incredibly important. And usually the CIO or the CTO has to navigate that CFO review, and before he gets in front of the CEO, before he gets the check.
That's right. I mean, it's as we're developing software, it's looking at that business case for new product lines, monetizing new features. And what do we expect out of that? Not blindly just, investing a bunch in R&D and seeing where it gets us. So yeah, the CFO should be involved in that path and helping shape that and influencing that. And now it's both the products we're developing, but all the software that we're using internally too, and where that fits. So a lot going on there.
So what made you, obviously airlines work on software as well. Obviously, what is it? The famous Mark Andreessen quote: "Software's eating the world." What was the trigger for transitioning from something you could say quite traditional to software from airlines? Was there a particular thing that happened that kind of caused that change? You could say change direction, or was it just like a natural progression?
It was a bit luck, and I'm happy for it. And, it's just one of those, as you move up in your career and looking for different things, we were trying to move back home and close to home. And there were very limited finance opportunities in the small town that we're from. And there just happened to be a division of a healthcare tech firm that was looking for an FP&A analyst, and that's how I got into software. So kind of completely random, but very happy for it.
And what was the thing? I mean, I was actually looking. Actually, it's interesting. I mean, obviously, your kind of, I suppose, your persona or your brand is the SAAS or SaaS CFO. That's right, yeah.
Yeah, and totally accidentally, but yeah, that's the brand now.
But the I was just looking actually at the origins of SaaS actually just before we came on this episode, just to gen up on it. And it's quite, I don't know if you know that, do you know where it came from? I mean, I don't know if you've looked at the origin story of it. It's quite incredible.
Oh, you mean the actual term, the software as a service term?
Well, no, well, the thing is that what I found was that there's a predecessor. It was called CTSS. So it was basically on a mainframe. You probably heard of those things called mainframes. You're probably, hopefully, old enough to remember those things. That I am, unfortunately, as well. This concept of time sharing, like sharing resources on a mainframe, was basically, that's what they call, was kind of foundational for what became SaaS.
Yeah. Oh, yeah. It's funny. Yeah. No, it's interesting. Yeah.
And obviously, then that develops. I think the main trigger point, which gets kind of, I suppose, credited with the birth of SaaS, I suppose, is the guys that dominate the San Francisco skyline these days.
Yeah, the Salesforce folks.
Mr. Benioff.
Yeah, it's funny. I spent about a year as a mainframe programmer, programming in COBOL, so very familiar. Yeah, with
really
with that.
Oh, wow.
With that environment. Yeah, before I went back and got my MBA. And you just using that compute power with the mainframes and getting that share for the programs that you needed to run. So I know, I can't remember, there's kind of renting that time, and then of course the transition to ASP. And I still remember my first assignment when I was working on-premise SaaS or software in healthcare tech. And the GM came to me and said, "Hey, Ben, let's do this ASP thing. Come up with some subscription pricing for our healthcare tech product." So open up the spreadsheet, blank spreadsheet. It's like, okay, what costs are involved? How should we price this? So that was really my first exposure in the 2000s, early 2000s, to the whole subscription model, and then moving from on-prem to the application service provider model.
Like how you wrap the whole thing together with the infrastructure. Yeah.
Yep.
Yeah, so I didn't realize that was. I mean, it seems logical now, but obviously, it's 24 years ago. It's quite incredible since the Salesforce, the little hut on the top of the hill, just looking down on San Francisco. One of the things I think I find quite interesting though these days is that all the, and I know you try to attack this head on, is all the kind of what I would call the lexicon. So there's a lot of, when I speak to technical founders, it's particularly technical founders rather than business founder, is they just kind of, it's a bit like they're trying to deal with, what's the idea? How do you validate the idea? How do you get the product market fit? But then they also then get this, it's depending if they take an external investment from a VC or angels or whatever. And obviously, depending on the angel background, they may be more au fait or less au fait with that lexicon. But I presume this is part of your kind of mission as well, is helping founders to understand just the lexicon, all this language around finance, and all the, what I would call the TLAs and the FLAs, the 3-letter acronyms and the 4-letter acronyms. I mean, do you find that as a bit of a challenge still today and increasing?
Yeah, definitely. I mean, with SaaS and like any industry, just when I was in the airline industry, same thing. You got RASM, CASM, yield, all this stuff that you're managing, the airline with. And same thing with SaaS. You can't just manage your SaaS business with financial statements. And of course, that's how you start out, with your bank account, cash balance, financial statements, but it has to evolve. Just like fundraising, seed rounds in that story, and then Series A, you've got to support that with numbers and traction. So you do have to evolve. And there was just a post on LinkedIn this morning from an investor saying, "Hey, founders, it makes me nervous as an investor if you can't talk numbers and you don't have a grasp of your numbers, like gross profit, acquisition metrics, and a few other things, retention, a few other things that you listed. So true. It's at some point, founders, maybe you don't have to understand just the debits and credits behind it, but you need to understand that SaaS language.
But do you think that, so do you think that's a gap in the education generally? Because, if you think about, if you go through the traditional university MBA piece, and then you just, oh, I'm going to be a SaaS founder. Okay, I've got a laptop, I've got an internet connection, I'm quite good at GitHub or whatever, or, I better start building some code. And but there's a whole gamut of things you've got to learn on the business side that is still, I think it's still a massive gap. I presume that's why that's kind of incentivizing and motivating you to help founders out in this area. Is that right?
Yeah, because I don't know what's being taught right now in the university systems, college system, higher ed, but definitely I'd love to participate there, because I think there is a gap, right? They teach the basic financials, but there's nothing industry specific. So hopefully you come out of the education system with a grasp of fundamental, business concepts. But say you're a technical founder, right? You're in the engineering school and learning that, and maybe there's this random business class that you take, but it's not a focus. So I understand coming out, you develop your product, and then there is a gap, and this is not in textbooks. There are tons of blogs out there, thousands of blog posts, but then which one do you follow? Which one's accurate? To really cut through the noise and learn what you need to know to scale your business.
Maybe there's a segue there. Maybe we need to get Mr. Ben Murray to write the book and get it out there, unless you're already working on it.
Yeah, no, people have mentioned that. I'd love to do that. It's just time constraints right now. So
yeah, but you can get ChatGPT to write it for yourself, can't you? Is that right?
Yeah, no, I should have it.
I am a CFO. I am a technical founder. I need to have a CFO as a best friend.
Yeah, I need to just analyze my blog and then just write up a draft of a script.
Yeah, I mean, it's interesting. I mean, that's what my observation is that on that finance side, obviously, trial balance, P&L balance sheet, but then when you get into, like even just like cost allocations, to avoid, to work out cost, CAC, cost of acquisition, it's like, and also how do you get which data points are relevant? Because as you're doing, on the earlier stage of, you're trying to get data points to validate your numbers, and what is bookable as MRR, ARR, what's bookable as non, how do you book non-ARR? It's a bit of a minefield, isn't it?
It is, and that's where I think at a high level, it seems like SaaS metrics, SaaS finance, very simple to understand. And some of the formulas, very simple, like CAC. Very simple to understand, but it's all those nuances. Or you go and try to do this for your business, but your data is bad, or you can't find the data, or your P&L isn't set up correctly, or you're not tracking bookings. Just all these things, that real life stuff where you have the theory of it, then the actual practical application, then that's where it becomes difficult.
And do you think that gets amplified as well? Because obviously you get the situation where, my experience with some of the VCs, depending on what stage they're at, they can get quite demanding of, obviously they put money, if you've taken money, then obviously it's there's some balance sheet things to manage, and they want to make, runway and all that kind of stuff. It becomes, I've noticed more than one founder that I've worked with, obviously being a founder previously myself as well, is that element can be very stressful. And I suppose it's that thing about, how do you find somebody who can help you understand the business through that lens, and actually then, guide you, because, you just don't know. You have those kind of blind spots. And if you're not a qualified accountant as a start, which obviously sounds like you are, or you've not worked in a large enterprise finance team, it's quite challenging, I think.
Definitely. And there's a progression with your finances and accounting within SaaS, and I give a lot of credit to the VCs who demand numbers, or at least the right metrics at the right stage. If you're just a million ARR, I'm not going to be calculating 30 different metrics, or every metric in my 5-pillar SaaS metrics framework that I implement for my clients and teach in my course. But what are those stages? And it's always the accounting foundation first. Let's make sure that's set up correctly. If not, we're in trouble. And then set up the proper SaaS P&L, so we can see COGS versus OpEx, so we can see gross margins, so we can just easily consume data within our business, make it easily consumable for investors, for our board, for potential investors. And I'm not even talking SaaS metrics next or at that point. And then, all right, is it the right time to start calculating some SaaS metrics? And usually it's I'd say that kind of that tipping point is around 3 million ARR, where we should have the accounting foundation in place. We should be able to produce a nice SaaS P&L. And then let's look at the metrics that could be available to calculate. And this is the nuances, where if you're targeting enterprise and your founder comes to me and say, I've got 10 customers, but I've got 3 million in ARR. Well, we're probably not going to calculate many sales and marketing efficiency metrics yet, because maybe you're not acquiring a customer every month. There's just not enough volume of data in your business for me to do much yet. There are things we can do, but if you're self-service, maybe PLG, and you've got 500 users and 3 million ARR. Yeah, there's enough data we can.
PLG, just for people that are listening, and all these. See, you've slipped in a little FLA there, haven't you? Or TLA, product-led growth. I presume by you mean PLG. Is that right?
Yeah, product-led growth. Yeah, of course. Now everyone knows now it's SLG, the traditional sales-led growth. Now now we've got community-led growth. We've got all these different things that are coming into play here.
CLG now. Oh my god, I can't keep up with all these three acronyms.
No, there are so many derivations now. But we had SLG, now PLG, community-led growth. We got other stuff. So yeah, you got to keep up.
I'm talking to Wes actually. I'm talking to Wes about coming on the show actually. I don't know if you know Wes Bush. He wrote.
I'm familiar with the name. Yeah.
Yeah, he wrote the PLG book. Yeah.
Oh yeah, very nice.
Yeah, I think he's actually got together with, Section 4. The Scott Galloway. The NYU. The guy that wrote the book The Four, about the 4 horsemen of the apocalypse. Basically, Google, Facebook, yeah. Scott Galloway. He's the guy that's the NYU marketing professor. He's got a company called Section now. And I think Wes is a guest lecturer on that section. They do like sprints. It's the big, actually, there's 2 of us on this Zoom call. This is the largest in the history of my Zoom experience. There was 2,800 people on a Zoom call for one lecture with Scott Galloway back during the P word that we're not supposed to talk about anymore.
Oh yeah. Yeah, no, that's a big Zoom meeting.
So yeah, no, it's interesting. But I think what you just raised there was about the topic of what's the right stage. I think what I see with some of the stuff about the comms is what's appropriate, what financial governance is appropriate at what stage of your business. So what you're saying is that from like 0 to 3 million ARR, there's this kind of like a kind of it's accounting foundations, effectively getting them in place, and then obviously as you get to tens and tens of customers, you're in kind of scale up mode, because you up to $3 million ARR, you kind of like I suppose that you're not quite at Series A, are you? You kind of you're probably at seed, or you're just about to go into Series A to scale up. You've got kind of product market fit. Is that the assumption?
Yeah, I mean, I work with lots of founders, either bootstrapped, or they have seed money, or maybe a Series A. So right at that point. So yeah, there is a natural progression of on the back office of the accounting, the P&L, the tech that you need. Do you need to put revenue recognition in place? I need software for that. How complex is your invoicing? Are you usage based? Are you subscription? So they're just things. Yeah, it is a progression, so you don't get caught later with no data, and now you've got investors asking for information, or you're going for a raise, or and people are clamoring for data.
What you're raising also is that thing about how do you instrument your business as well, so you can actually collect the right data as well. So that piece around, I mean, there's a few software companies I've worked for where, we're gonna give them a license, and then we're gonna check the usage on we're gonna audit them, and we go, how are we gonna do that? Oh, we don't know how to do it yet. It's that that consumption-based pricing, all that kind of thing. As you go to that, it's how do you instrument the software so you can actually check usage. I suppose it's pretty fundamental as you grow these types of accounts.
Oh yeah, especially if you're usage based, yeah, the tooling behind the scenes to be able to capture that operational data, feed it into your accounting system, invoice it correctly. Yeah, just that actually, requires just a little bit more complex, a little bit more tooling to do that versus say I invoice an annual subscription for $12,000. I send it, done, do rev rec, all that stuff. So they're just different setups, and also your go-to-market motion also dictates your tech stack and what I'm doing as a CFO. So that, yeah, just all those nuances that have to be considered.
So do you think, I mean, I know you put some posts out about this more over the last few months about there is this kind of developing kind of like, well, I don't know what you call it, the operating model, so the software you have to run the software company effectively. It's a bit like the software for the software or software for the SaaS. Because and it looks quite complex there. It looks like there's quite a lot of, it's a bit like it's the jigsaw puzzle. What have you found with that? Is that still developing as a segment, or is it still is it a lot clearer for you? You know based on the stage of the company what you'd recommend to use, because you can go down I suppose you can go down a rabbit hole with this kind of stuff, and it can be very distracting, can't it?
Oh yeah, it's exploding. I had founders and people reaching out to me all the time. Ben, what should I use for accounting? What should I use for invoicing? What should I use for A, B, and C? And so I just decided to create my own tech stack report about 4 years ago. So I just released my 4th annual earlier this year, and I'm going to start collecting data in the 4th quarter of this year for my 5th annual, because people just kept asking. So I'm like, hey, I'll just reach out to my audience and my subscribers, and what tech do you use in your SaaS company? And this is not a market map. When I post things, people are like, hey, you forgot this, this, and this. And it's like, no, this is, I'm sorry, this is what people are using.
This
And
is actual.
not just my opinion of all the players out there. So just to help, and in their categories where it's crystal clear who, the top players, for example, like Stripe, top player in payment processing. In accounting, there are 4 players. It's QuickBooks, Xero, Sage Intacct, and NetSuite. And that's just the way it is for the SaaS industry. Now there are players trying to break into that. It's always interesting to see the newcomers to the survey, to the report each year, but it's just, there's so many tools available. And I started just with finance and accounting tools. So maybe like 10 questions. Now I'm asking 18. And it's going to be even more, because it's like CRM system so important that integrates into accounting, and contract management and close management and all these different things, and SaaS spend, that's a new category, sales compensation and commissions tracking, so it just expands and expands.
What would you call SaaS spend, and how would you describe SaaS spend?
Well, we have to be careful there, because now there are tools that track your internal use software, so you're signing up for a SaaS application.
Right, okay.
Right, like I sign up for HubSpot, and then I sign up for Sage, and I sign up for all these different software applications, and that's a growing number within SaaS companies. That's hundreds of thousands, millions as you scale, and you've got to control that. So that's a relatively new category.
Oh my God.
And a little bit different from like spend management, where now you have those virtual,
like procurement.
Procurement, corporate cards, easy to issue, all these, kind of virtual cards to control spend, have budget.
So what you're saying is like there's like cost sprawl. There's cost sprawl basically from the internal stack of software that you're using to run the actual software company itself.
Right. Yeah, exactly. Yeah. And you don't know that I've got 90 applications being used internally, and are they being used? Are they, should we cut back? And, that's been a huge question in 2023, is like, all right, now we're cutting back. It's the year of selling to the CFO, and everybody's tightening. Just another category. And that's why it's becoming confusing now, because there's just so many tools out there that will help us, and a lot of good tools. And it's kind of cutting through that noise to figure out what's actually in use.
Because there is, I suppose that's the thing, is there's no one provider you can go to. It is a bit of a jigsaw puzzle, isn't it, to put together, because it depends on what stage you're at, what industry you're in, what's your economic model of how you license, because you don't want to put like a monolith in there. You want to be quite lean and agile, but but also you got to make sure you cover all the bases. So it is a bit of a, you got to think about it, haven't you, really? It's quite difficult.
Oh yeah, it can't be ad hoc. Just like Dev has their product roadmap, CFOs need their internal product roadmap, how they're going to build out their tech stack, how it integrates to other solutions within the company, and that's now a big part of the role.
And what? So I mean, we talked about kind of like the metric stuff. I mean, in terms of, I know you mentioned that you do obviously fractional CFO, which sounds fantastic. It was a great service that you can help founders, go through those initial stages. What stage do you think? I suppose this. I think I know the answer to this, but what stage are you seeing that the CFO is appointed then within that software business? Is there a certain inflection point along the journey that you think, or it depends?
It's one of those, just, thresholds are so hard, but what I see in my recommendation, if you're above 10 million ARR, say USD and scaling, I'd say it's time to consider a CFO. I mean, I've seen companies bigger than that, 17, 20 million with no CFO and really poor financials, but they got away with it because they were profitable. They had cash in the bank, and they just found that business model that worked. So they had a little bit more luxury of time, but not everyone has that luxury. So I'd say above 10 million. I've had fractional clients even at 3 billion ARR hire a full-time CFO. And that's usually,
so you say 3 million or 3 billion?
Yeah, 3 billion ARR. And that's usually, that's a little early. I'd say now you can use fractional resources, fractional CFO, CMO, CRO, COO to help you scale where you don't have to make that huge investment for that C title. And then in the finance and accounting function, you can outsource your accounting, and then start bringing some of that stuff in house, and then, hire a CFO and then bring more. So there's definitely a progression there.
Interesting. Yeah, I mean, I think it is that, because obviously when you start to, as you say, you ramp up on that leadership team, you've got the founders, and obviously then when they try and build the leadership team out, it then becomes, a significant burn. I suppose you've got to have a decent balance sheet to kind of, cover the costs of that. But obviously there's an assumption that you're going to, blow the doors off, so to speak, from a numbers point of view.
Yeah, and it surprises me sometimes when I've seen companies that have raised so much money and, say 40, 50 million, and, they're getting to a decent size, upper single digit ARR, maybe hitting, 10 million plus with no CFO, but burning cash, and then they get in trouble. And it just shocks me sometimes that with that much cash at play and a burn rate, that they don't have a CFO installed in those companies.
And the thing I was just going to say was that it depends, I suppose. Also, does it also depend on who are the stakeholders? So, at that level, have they run the business to a point where they've had their first external investment, maybe with Series A, they'd actually organically grown, they'd grown customer balance sheet to that point. And then the founder maybe has been running the business, or founders, and then they have to step up, because what my observation is, if you get private equity involved or VC, they kind of stipulate that as a part of the conditions for the term sheet, don't they? About you've got to grow up from a organization point of view. Is that what you see as well?
Yeah, definitely in the PE world, where usually one of the first functions they're fixing is the finance and accounting function. Because PE, of course, they want data, they want metrics, they want forecasts, they want tight financials, tight close process. So you see that finance and accounting is definitely a focus in the PE world, because there's a lot of leverage at play, a lot of debt at play, and we need to have financial transparency and know where we're going. And what makes investors really nervous is when you don't have a good grasp of those numbers. Now, VC world may be a little bit different. Maybe we're looking at that market share, we're looking at growth, but still, it's always what is that path to profitability? Especially things change so much in 2023, is now longer cash runways, and let's have financial discipline for the first time. So you still need a financial framework, still need some process in place to know where you're going over the next 12 to 24.
Yeah, it's not the next month or next quarter. You've got to look at a longer horizon. And I suppose that's where the discipline of the CFO and to your point about, actually, I presume the CFO can't do it all by themselves. They've got to actually build a finance team out, which involves, financial planning. And I suppose that's another skill that some founders I observe sometimes, that can even just scenario planning, about, best, worst, most probable case. Depends on what the background is. Are they comfortable doing that kind of, especially on, the forecast accurate number, getting to that point of view, and what's the shape of the costs that you can afford as you go forward? Where do you invest on your people plan? So it's all kind of intrinsically linked together, isn't it, I suppose, at the end of the day?
Yeah, definitely. Scenario planning, just part of financial planning analysis or FP&A, and even doing that for founders at 3 or 4 million of ARR. And we're just doing a couple scenarios just to make sure it's easy to go crazy. We don't need to run 10, 20 scenarios, but just what are those realistic scenarios of where the path could go with this company? And then above 10 million, usually you have at least an FP&A analyst in that team that's full time running the analysis and forecasting.
Mm. Yeah, like an ongoing kind of process. Yeah, that you kind
Mm,
of adjusting. Yeah.
yep.
So I mean, I know that obviously, watching the markets over the last, 1 to 2 years has been a bit of a kind of a hiatus where there was a lot of money taken, I think about 18 months ago. And the unicorns have dropped off quite a bit, as noticed. What's your kind of view on the outlook of today? What are you seeing? Are you seeing it's quite a buoyant market still, or are you, because obviously you're looking through the finance and investment lens and helping founders, or are you seeing it kind of getting a bit quieter and people being a bit more prudent and a lot more due diligence on kind of putting money into this kind of sector? Any
Oh,
thoughts on that?
definitely. Yeah, you see longer due diligence periods, just yeah, just the standards are higher as the standards are higher for ARR multiple valuations. Earlier this year, it was like, yeah, everything very prudent, very cautious. What's happening? Let's just really lock things down. Let's make sure we've got cash we can survive through 2024. Let's not do any
Mm,
M&A. Let's go to market if I'm a SaaS founder because I don't know what I'm getting into. Now things seem to be kind of thawing a bit, and people are already talking about that even this year you could see some nice M&A activity, because before it was like 2024, that's going to be a huge year for M&A, which it still could
mm,
be, but maybe it'll be a little bit earlier. But again, if you're a founder with a good financial profile, good metrics, good traction, there are of course still a lot of investors out there who will pay
mm.
good valuation for that. So not like high single digit 10x ARR valuations are off the table, but if you have a good financial profile, you can still get funded or go for that exit.
So do you think the multiples have come off a bit? You were saying is they came off a bit, but now they're recovering. Is that what you're seeing from a?
Yeah, I think so. And even some of this, Carta produces some nice data, even from some of
Mm,
the stuff that they're posting, that maybe, valuations, things are coming back a bit. So that seems to be the whispers right now. And, just my own experience with founders going through due diligence or M&A, that, yeah, it's still possible. It's not like you put a nice SaaS business out there with great metrics and traction, and they're going to only offer you 4 or 5x. It's so, yeah, just not the case.
mm. Interesting. So it's still worth being a SaaS CFO then. You still see some future in
Oh yeah, yeah. There's a long future in, yeah, being a SaaS CFO. Yeah.
So I mean, one of the things we talk about on the G&T sessions, not about gin and tonic, but some people think it's about gin and tonic. It's about growth and technology. We talk about peaks and valleys. So I know in your kind of intro, you talked about a lot of very, exciting and fancy stuff that you've done: airlines, software, PE firms, etc., etc. What would be any stories you want to share about maybe the things that didn't quite go wrong, and what did what was your takeaway from that, or what did you learn from that? Any thoughts around maybe not just the peaks but also the valleys that you want to
Oh, you mean like, say, career wise?
Well, yeah, I mean, in your journey so far, I mean, obviously, it's I think it's just it's something we kind of cover on the G&T sessions, because I think it's people can learn from that as well about nothing like learning through the valleys as well as the peaks.
Yeah, I mean, there's so much experience to, yeah, living through peaks and valleys, and just, time, a good experience for me at one CFO role was just time and seat. That you see things come and go, or actually it's like, well, we tried that 3 years ago and it didn't work.
Mm,
And roles, and see titles and come and go and exit, but just that experience, sometimes just that experience pays off so much, just that intuition that you build up. But there are always peaks and valleys, for me, career wise and just companies. But for me, it's been, my career has been through FP&A and just trying to constantly learn outside of the workplace, to bring that in to improve the finance and accounting function. Uh, So it's a great question. I think, looking back, it's like, really, treasure all the relationships that you develop over time.
Mm.
And that kind of, comes down to that trust and just working with those teams and your colleagues and your peers, to push the org forward.
So there's no particular story you want to share today then, or nothing that springs to mind?
It's, I've,
Don't be shy, Ben. Don't be shy. By the way, just to let you know, my eldest son is called Ben as well, which is obviously
oh,
another
nice.
reason for getting you on the show.
Yeah, yeah. I mean, I've been through, in the airline industry when I was working in regionals, one company, we had to file bankruptcy, which is not fun,
Mm.
and, so it's I don't know, it's hard, especially in the finance function, especially in the airlines. It's so financially disciplined. Finance is a
Mm.
huge role, even more, I'd say, than software. That finance is integral in the airline industry because there's so much capex at play, so much labor, so much headcount.
Mm.
Yeah, that you can't wing that.
Mm.
So I've gone through one bankruptcy, and also even in SAAS, I became CFO at a SaaS company, to help fix the finance and accounting function for a future exit. And they had done a couple of acquisitions prior to me coming on board and didn't really do the right due diligence, the right forecasting. And all of a sudden we found ourselves low on cash, and living payroll to payroll, had to go through headcount reductions.
Right.
And, so it's, in good times, bad times, you're always
Mm.
learning and keeping those lessons with you. But I've seen both where things are going great cash, great EBA, but then as a CFO living payroll to payroll, pulling on that line of credit, to be able to fund payroll
Mm.
to get us out of that trough. And it comes back to why finance is so important within software companies, because if you don't do the right due diligence, you don't do that, all of a sudden you can find yourself in a lot of trouble.
Mm. Yeah. Yeah. I mean, I think that phrase you used a bit earlier, just a few minutes ago, about, time in seat. It's probably as you go through those cycles. Yeah. I've been through M&A, both being acquired and being an acquirer. Then you do, market listings and stuff like that. And it's amazing what you don't realize you've learned and picked up, and flown close to the sun, and then obviously navigated around it. That you actually, then that situation comes up again, and then you go, aha, this, I think there may be a way around this, and what about this as an option? I suppose that's the kind of the wisdom dimension, isn't it, as you get into the more and more experiences you come across.
Oh, definitely. You learn that over time, and definitely when I was just starting out my career, didn't understand patience and time and see. You just want to move up, you want to move up, you want to get promoted, you want those sexy roles, and you just have to learn that. It's unfortunately, it just takes that experience, to build and see different scenario situations, working with different leaders,
Mm.
working with so many different, GMs and bosses, and everyone has a different personality, different style, and being able to understand that, and how to work with different people is so important.
Mm. So I suppose, I mean, just slightly change the topic. I suppose, what would you say you're most grateful for then?
I'd say, one thing is, I've worked at Fortune 20 companies, huge companies, and have worked for small companies. And, looking back, really grateful, working for the really large companies who had a really mature finance process. So you can learn so much from that
Mm.
process. Now, of course, you have all the politics, the bureaucracy with large orgs. So you take the trade-off there. But if you can find yourself in one of those positions and just absorb as much as possible, that you can leverage that so much, in later positions in your career. And then also being in really small companies and 30-person companies where every single person,
Mm.
and it's just so much fun. It's such a team
Mm.
environment,
Mm.
so it's there, taking what you can from those large orgs, which really helped me, and then you can stand alone as a finance leader, of what you've learned in the past, and implement that in places where they need that structure, where they need that
Mm.
guidance.
Yeah, because you can have a real impact, can't you? Because
Mhm.
you kind of, your experience shines through. Yeah, cool. Now, I mean, it's so what? So I suppose, I don't know if there's an oxymoron question, but I know you're in accounting. I'm speaking as a non-accountant here, but what gets you most excited these days then? What can you see in the future that's getting you excited about the stuff that you've been working on and what you're doing today?
There are a couple of things, I love creating content and educating, so I love sharing my content, sharing as much as possible to educate the SaaS community. I have actually started my own SaaS community with about 2,500 members and growing. So I just love that. I love the satisfaction that comes from that. And just people have used my templates. My templates have been downloaded over 100,000 times, and people have come to me and I've used, they're like, hey, I've used it for, I raised some money with your forecast model. And I did this, this, and this, so it's so satisfying. So just try to push as much useful content out there. And that's why I started my blog, is just to make it actionable, make it direct, make it useful. So on that front, always trying to push out good content. And then with SaaS metrics, things are evolving. It's becoming more difficult to understand the dynamics of our business sometimes. If we have, say, a PLG motion, and how does that affect CAC, and who applies influence on post sale in a PLG, all these areas that are just evolving, where it's actually making SaaS metrics and SaaS finance a little bit more complicated. I'm a founding member of the SaaS Metrics Standards Board, and we talk about this stuff all the time, is just trying to understand the frameworks and how different pricing models, revenue models are impacting the economics of our business.
And I was just, okay, so I mean, yes, I think that's the thing. I mean, what you're seeing great adoption of what that must be very satisfying when you actually see people embrace it and use it, and then come and even give you feedback. It's just they don't disappear into the future. It's like, they actually give you feedback about they've actually used it, it's made an impact. It must be great. And one of the things that, I mean, I know that you've been on this, so Nathan that runs those crazy
Nathan Lecca.
Yeah, those crazy, what is it? I don't know, what do you call it? 1 hour, or it's like a 2 hour tsunami of content. Which I know you obviously get on with him well, and I think you presented at his event in New York, I think recently, didn't you, or a while ago?
Yeah, the SaaS Open. Yeah, presented a couple times there, and helped out with one of the finance stages there. So, and then I'll be on his August webinar. So we do a few things together. Yeah.
I think they're fantastic sessions, and he always kind of endorses and brings you, Ben, are you there, Ben? I need some help from a CFO.
Nathan produces great content, and it's like entertainment. He's got his stage set up there, but I think one thing, philosophy wise, that we really align on, Nathan and I do, is he tries to make things very actionable. Cut through the fluff, and what did you actually do? If you said, hey, I grew sales, well, what did you actually do, to grow sales? Or I built out. So he tries to make it as actionable as possible. And that's always been my philosophy with my blog, is to try to make it just immediately useful. So that's why I love his stuff.
Yeah, because I think he's kind of like more around the kind of the sales ARR metric, isn't it? It's a bit like, how did you deliver that growth, or that quarter-on-quarter, year-on-year growth? What was the underpin plan? I think that's the thing that he focused on, isn't he, about growth metrics, I think.
He has a lot of different topics, but it could be like, if you're in a PLG type product, how did 3 steps to grow users, and SLG, and these different companies, and the tactics that they use to say hit 5 million, 10 million ARR. So trying to just make it as practical as possible.
Yeah, it's like a double act though with you and him.
Well, I provide that CFO finance perspective.
Yeah, you're the guy in the corner. No, don't say that, Nathan. Don't say that. Yes, say that. So he's got a webinar in August, has he? Okay, I'll have to check that out then. That's is that going to be a precursor to the next event then, the next big shindig in New York?
Yeah, I think his next, I think it's August 24th, his next webinar. And then actually, I think he's moving the SaaS Open from New York City to Austin. He's done some things in Austin, but now the March event will be in Austin in 2024.
Oh, right. Okay. Well, Austin's the new Silicon Valley, isn't it, I think? Is that right? I don't know.
It seems like every conference is down there now. I was down there for SaaS Doc, which was a lot of fun. I think they're one of their first,
internationally.
events, yeah, in the US. And then actually I was also down there at the same time for Kajabi. They had their user conference, and that's my online course platform and community and all this other stuff, which was a fantastic event. But then, yeah, it seems like everything you see now, yeah, it was conferences in Austin.
What do you call that? Do you call that Silicon Meadow? I don't know I don't know what you call it.
I don't even know what you'd call it, but
Silicon Prairie. I don't know. No, I've just been asked to be. I'm just helping. We're doing something in Cornwall. Have you heard of Cornwall? So there's a place called Cornwall in the UK. It's where the beaches are, where people go surfing. There's some very nice beaches down there. So they're doing a thing called Startup Cornwall. So I'm going to be helping out with that. There's a startup competition in September that we're trying to help founders and get together. It's actually going to be held in a nightclub in a very well-known seaside town in Cornwall. It's called Startup Cornwall. So yeah, it's obviously Silicon Beach, you see, is supposed to be Tel Aviv. I don't know if you know that. I don't know what you do internationally, but then obviously Silicon, we just have a roundabout in London. We just got a roundabout, yeah. You got Silicon Valley, you got Silicon Prairie, Silicon Alley, I think in New York, obviously Silicon Beach in Tel Aviv, and then Silicon Roundabout in London.
Oh yeah, you realize, right? SaaS is so global. I talk to people all over the world, and a lot. Yeah, of course, huge SaaS tech scene in Israel. Have students in Europe in my course all the time. Yeah, so talk to people all over the place, and I have a drift message box on my blog. So it's like, yeah, people, Africa, wherever it might be, just starting their SaaS company, questions about SaaS, different things. So
is that like an
open
inbox? Is that what you?
Yeah, you go to my blog and it says, "Hey, is there anything I can help you with?" And that actually connects you directly with me. So
wow.
People ask questions through that, or just general questions. I can point them in the right direction.
Interesting. So yeah, I've got a couple of final things to ask you about. Was firstly, I suppose, given what you've been through, as your kind of journey so far, what would be your kind of, I suppose, pearls of wisdom? So what would be the kind of the top takeaways for people that are maybe budding founders, existing founders, looking through the lens that you've been through and the journey you've been through so far? Is some things to think about that they sometimes they need to learn about, but also sometimes they need to navigate because they found out from Ben before they got to that stage. Any thoughts around that?
Oh, definitely. I mean, it comes up over and over, and I've been doing this for a while, and really live and breathe SaaS every week, talk SaaS metrics almost every day. And so there's a progression for those SaaS founders out there who are just starting out. One, it's start your financials from day one, spin up QuickBooks, Xero, whatever it might be, and have your financial statements. And then eventually you get an outsourced bookkeeper or accountant. And with that, that can be very, very cost effective. Have them handle the debits and credits, but make sure they understand SaaS. And that people come to me all the time, founders, and they're like, I've got my tax person, I've got my bookkeeper, but they don't know SaaS. They're doing it wrong.
Right.
So if you're going to outsource accounting early on, which is very common, is find someone who understands SaaS, who handles SaaS companies. So get your accounting set up. Make sure you're compliant, legally and tax wise, wherever you're doing business, because that's now pushing, before that was kind of big company problems, but now, we've got to consider
what jurisdiction you're in. Yeah.
Jurisdiction, sales tax, global sales tax, making sure, you're filing all your taxes in your jurisdictions, whether that's corporate tax, entity tax, payroll tax. So, of course, there are a lot of solutions that help you out with that, but accounting foundation, get your financial set up, get a nice SaaS P&L set up, and then from there progresses into SaaS metrics, start forecasting. So there's just that progression. So first it's accounting, SaaS P&L, forecasting, and SaaS metrics.
Right. Okay. It's kind of like an evolution. Yeah.
Yes. You can't just overnight, hit a magic button and I've got everything in place all at the same time.
I'm sure quite a few founders would wish that. They wish they had a magic wand to go alakazam.
Yeah, that's another good point, is if you're thinking about some event down the road, whether that's fundraising, an exit, maybe acquiring a company, make sure you have enough time runway to prepare for that. Because I have founders reach out all the time and they're like, I'm fundraising, I need a forecast in 3 weeks, I need metrics, it's just too short. One, I don't have the capacity in that amount of time to crank that out, but it's just, you need time to get that in place. So think 6 to 12 months out. Ideally 12 months out, if you're looking at some sort of event, let's start planning now. If our financials aren't set up correctly, if the debits and credits aren't in the right place, if we don't have the right reports in place, we have time to fix that, get things in place, and then we're better prepared. And you hear that from multiple time founders all the time, is they wish they had started earlier with their finance and accounting.
Well, it's also having a discipline around data rooms and things like that, isn't it? I know you can simply, some people say you do it too early, but actually the discipline around that just makes it easier for future, doesn't it, when you get into those kind of conversations?
Oh yeah, I interview founders for my SAAS podcast, my SAAS founder podcast, and it's always, let's getting that data room set up correctly with enough time. It's one of those things. You're ready to pitch and tell your story, but you have to have all that data ready as well.
Yeah, because as soon as you finish your pitch, they go, okay, I like it. Give me access to your data room. You go, oh, quick, let's. Be ahead of the game on that.
I just interviewed Dan Marcus at Ramp, and great serial entrepreneur, and he had some great wisdom of, as he raised a 5 million seed, and he said, we had a timeline. This is how this process is going to work. We're going to do this. We're going to pitch. We'll open up the data room. We need interest by this date, a very scheduled process. So the expectations were clear to all the potential investors.
Yeah, because especially when you're doing fundraising, it's like a sales process, isn't it? You've got to be disciplined around milestones, otherwise it always goes to the right. Yeah, and doesn't maybe close in the time that you want it to be closed by. Yeah, fantastic. So I suppose my final question is, given your prolific journey so far, for anybody who wants to know more about Ben Murray and SAAS CFO. What's the best way of finding more information about what you do, and I suppose how you help people, what would be the guidance on that?
Yeah, I have some decent SEO going. So if you do Google the SAAS CFO, it should pop up my blog. But the best way to reach out to me to find more info is to go to my blog, which is THE, so thesaascfo.com. And they also have thesaasacademy.com with a THE. So I've got tons of content, resources, templates, downloads. But those are 2 great spots to learn more, and also to reach out to me.
So that's the SAAS, SAAS, yeah?
Yes, yeah, THESAASCFO.com.
Fantastic. Well, thank you very much for coming on the show. I know it's taken a bit of a time to get you on the show, but I do appreciate you hopping on the show. And you joined us from the States. I know you've got this kind of Zoom background, so I don't know where you are physically, but whereabouts are you? Is it East or West Coast? I wasn't sure.
Yeah, I'm in the burbs of Denver, Colorado.
All right, so you're CST, okay.
Actually, Mountain Time here. So
time.
So
okay.
in Denver, yep. Cool.
So you can look out across the mountains.
Yes, yeah, nice view of the mountains. Yeah, never gets old.
Well, great, fantastic. Well, thank you very much for coming on the show. And that was Ben Murray, the SAAS CFO, and that was Andrew Turner, founder and host of the G&T Sessions podcast. Catch you on the next episode. Thanks for joining. All right. I'll hit end here.